All right, hey, good morning, everybody. It's a Thursday. What is it, August 2nd? Yes, August 2nd, 2018. Daily Forex trading strategy session. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. I'll be your guide on this journey called Forex. We will conduct technical, maybe some fundamental. I mean, the Bank of England raised interest rates, right? Woohoo. We have non-farm payrolls tomorrow. So we're kind of stuck in between those two things. Also, I believe just now the press conference for the Bank of England has started. Anyways, thank you very much for being a client of TradersWay. We appreciate you. We work hard for you. I'm here to help. If you are new to these webinars, I'm trying to earn your loyalty and respect, and you show that by visiting TradersWay.com and opening an account. Start with the demo. Let's fall in love. Okay, everybody got their good. Yo, yeah, boy. Cool. So, yeah, Great British Pound moving because of now the press conference, but earlier the announcement of the change in the policy at the Bank of England. Cool. I just like this. This is the one I want to pull up, though. It's just fun. There's the bottom. There's the top. Full trip for the week. Check that out. Just craziness, huh? Probably not a pair traded as much as others. But anyways, you can see the initial move was bullish for the pound and then has since come off. Maybe it hasn't changed a whole lot. We'll find out. Go back to the 4 hour. We're just stuck. We're still stuck here. Okay. We'll see what happens from there. Let it work its way out. Has it changed anything swing-wise? Not really. Like, for example, if you were a bull swing trader, you bought there and that's what you were doing. If you were a bear swing trader, this was your sell and it was perfect. So it just comes down to are you a swing trader and are you a bull or a bear? Both bulls and bears had opportunities, which is fairly normal, in fact. Only one of them so far is winning. But nonetheless, I look at this and it doesn't look like an amazing trend to be involved in anyways, does it? Is it going up or down? I don't know. Well, if you look at something, especially on a 4 hour chart, and you're like, I'm not sure if it's going up or down, you should probably find something else to do with your money. There's great ways of losing money, better than trading this. Like building a movie theater and for some reason the receiver shuts itself off. In the middle of the movie, just shuts itself off. It's a great feeling. It's a great feeling. I'm just saying hypothetically, of course, hypothetically. It's wonderful. All right, we did that one. So whatever. So the pound's moving. There's more interesting things going on, I think, anyways. Other things just to point out. I guess this is beast, so we'll cover this on a different chart. But I just want to point something out. On Monday and Tuesday, didn't we talk about this? As the bullish swing, not just on this, but other pairs? Two people confirm it, any more than two? Great. All right. And then, didn't we talk about on Tuesday or Wednesday the possibility of it coming back down? Wasn't that like a big theme that we talked about on Monday and then specifically today? That somewhere between Tuesday and Wednesday, there's a high probability of this crashing. But was it only pound yen, or was it more than just pound yen? Yeah, significantly more than just that. But I just wanted to point that out. We did have this as a buy, this is a take profit, and if it occurred on Tuesday or Wednesday, it'll probably come crashing down. It doesn't have to, but it probably would, or has a high probability of doing so, and that you certainly should or could put together counter trend is the language, right? Counter trend trade plans. And in fact, this is it here. That's it specifically, the up, the down, and around. Cool, right? Isn't that neat? Now, we also looked at this pair. Same thing. This is the obvious buy. We hit the target on Tuesday. You're supposed to take your profit. And if you get the setup on Tuesday or Wednesday, you should be short. Oh, that's cool. You guys remember this one? This was the buy zone, right? And like, here's the cool thing, like literally on Monday, this is the buy zone, right? This right here. It's that specific. We're talking about very specific prices here. The target's here, and check out what we drew. Crazy, right? Doop, 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 doop. Look at even the follow-on trades. Just beautiful. You can't get more specific than that, right? So my swing traders must be loving it if they're bulls, and if they're bears, they must be loving it too. It's amazing how these fundamentals and technicals line up, though, isn't it? Okay, straight out of the textbook, bulls buy their swing trade. This is it right here. The target is here. If you hit the target on Tuesday or Wednesday, you should look for a counter trend trade, which is this. Lovely, right? You guys sick of this? This is like, is it getting your nose rubbed in it? How do you feel emotionally? You're like, or is it like cool? Yeah? Okay. If there's something, if there was a lesson learned, write it down. By the way, double top, right? When you make the lower low, you're supposed to drag this, oops, you're supposed to drag this low across so that that's your new sell zone. Almost every one of these counter trend trades has set up beautiful second chance trades. things. So that's that. Now we just have to wait. I mean, there's nothing really more to do now, because it's near the end of the week. So I don't, I think on the long run, the prevailing trend will win. But then I look at this and I'm like, well, what prevailing trend, right? I guess this is more up and down. This is dangerous, right? So it's one of these things where we need NFP to go through and we need some more time to pass. But that's a very, very bearish top for Swiss. We should probably do something other than Swissy. Okay, so what's the prevailing trend? Right? So typically the prevailing trend takes over, but what if you don't have a prevailing trend? Then you wait. Yeah, Carney is speaking right now in the press conference, correct. So you can flip a coin. You could say, well, I'd rather this go up than down because you would earn the carry, that kind of stuff. So you can still do kind of your same job. You decide whether you're a bull or bear. Okay, that's cool. So if I was a bull, I'd say, all right, where would I want this to go up? Not that it has to, but where would the levels of support be? And you're like, well, a good one would be sort of in here. So it'd still be cool if next week we were trying to do this. That's cool. All right, so that's the first one. What about the second one? Is there a way that we can combine this noise here and a pivot? Could we do this? So next week's S2, this month's S1, could we count that as support? Yeah, so I guess plan B would be, it sort of does this. If I was a bull, that's what I would hope for, right? So that's what you'd be doing in these scenarios. Planning. Staying in control of your behavior. Okay. So who knows, between now and then we got non-farm payrolls tomorrow and everything, it can get pretty quiet. Try not to look at everything that's happened if you had missed it and then said, now I'm going to trade like a son of a gun. I think it's very common to get that feeling like you just missed 150 pips up and then you missed 150 pips down. So now you're going to start trading like a mofo. No, I wouldn't. If it's happened, it's happened. And you just got to prepare for the next move. Oh, did you hear about the Bank of Japan yesterday? So two days ago or several days ago, they said, we're not going to do this anymore. And the yens moved. It was like, I think it was buying bonds or whatever. So what central bankers don't understand, and I don't know why, because it's not that complicated, but when you tell the market that it's at a top or a bottom, the market's going to trade the top or the bottom, right? You're like, this is it. This is the end of the line. Well, then everyone's going to sell. Or this is the floor, like this is the lowest price we'll ever go. Good, then everyone will start buying, right? Because you're making a declaration. So anyways, I forget what the Bank of Japan said. It was something about like they were going to let it rise a bit. That basically they're not going to buy bonds, right? So what does that tell everybody? Sell, 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 right? Sell the market. If the Bank of Japan is basically saying, look, all right, we don't want to buy more bonds. We're tired of buying bonds. Well, then they just tell the whole bond market to sell, right? So what do you think the bond market did? Sell, sell, sell. So all of a sudden, like within 36 hours, the yield on the 10-year JGB hit an 18-month high. Nice. So what do you think the Bank of Japan did after just telling the people they're going to stop buying bonds? They bought a whole bunch of bonds because they're like, oh my God, look at interest rates. They were not ready for interest rates to go up. It's just funny, right? It's just funny that they're grown adults with 30 or 40 years of experience, you'd think, I don't know, and that they don't understand the consequence of their actions. They don't want interest rates to go up. But what was on their mind is they don't want to spend any more money. They're like, yeah, we don't want to buy any more bonds. Okay, good. We understand that. You don't want to buy any more bonds. Very uncomfortable. It's very expensive. You're really getting yourself into a troubling spot. But if you say that, then you're raising interest rates. And if you're raising interest rates, right, or if you don't intend to raise interest rates, then you better buy bonds. So anyways, it's just funny. So within 36 hours, the Bank of Japan reversed exactly what they said. So I don't know, someone has to commit hara-kiri or something. Someone should, right? At the DOJ. Oh my God, I'm tired already. Oh. Man, it's hard to be an exotic dancer and a currency trader. I just never get any sleep. Look at that. It's hard, man. All right. But I just love to dance. I just love to dance. All right. Well, of course, Carney's dovish. The English are ruining their economy. He has to raise interest rates because of inflation. But now you got like you're gonna get yourself into stagflation scenarios, right? Anyways, is this going up or is this going down? Is this bullish or is this bearish? Yeah. So what should you do? Just keep waiting? Why not? Not waiting for time per se, but waiting for price. If you were going to buy that, for example, if you're a bull at euro dollar, what price would you buy it at? So figure it out and then wait. It's not that complicated. Look at these monthly pivots. Amazing. So there goes the pound. Beast is looking best, huh? Look at that. Isn't that gorgeous? Who would have thought on Monday we were talking about it going up to this point and then dropping? None of us, including myself, expected velocity like that. But then again, we had Bank of England, so we knew something was up Thursday. But it's always fascinating. Trading is a pretty awesome career. Now imagine the old days. Uh-oh, here we go. Imagine the old days, guys. Remember that? When you were not entirely sure why it decided to reverse here? You just had no idea? Remember those days? And yet now on Monday, we talked about it going from here to here, and then on Tuesday or Wednesday, look for the counter trend. That's crazy, right? Yeah, okay. Looking at the map concept, first of all, that's typically intraday trading. So I'm talking like a New York session or a London session. A big part of minimal acceptable performance is that if you look at a trade setup and you see like less than 30 or 40 pips profit, that you should just skip it. That's another big thing. It was a way for me to sort of evaluate my put a value on or qualitative analysis of potential setups, because I want, if I hit map minimal acceptable performance, I want to be disappointed that I only made 15 pips. Okay. So for that case, I'd like to have only trade opportunities that are likely to give me 50, so that I can enter a trade and put my stop here, and then, you know, so let's say it looks like this, and then and off we go, and then there's one of these, and then there's one of these. So then I can move here, right? And then kind of trail it up until we get here. And then I get this. Okay? Yeah. But if I got knocked out, so instead, let's say the price did something kind of different. It went down, then it went up, okay? And then I'm moving. And then it did this kind of, you know, if I got knocked out there for 15 pips, I'm disappointed. A lot of people think that I'm trying to get 15 pips, and that's wrong. But yeah, the high probability, or it's not even probability. I think it's more of a closer to a risk reward situation, although I don't really like that idea as well, but I think it's closer to that, right? If I give myself a situation where I think I'm going to make 50 pips, that's the whole point. I got to like clearly have 50 pips in front of me, okay? Then it's worth the shot. And you probably shouldn't lose money on trades where you expect to make 50 pips, right? Like if you bought it here and then it went like this, like I was so wrong. It's like crazy wrong, right? It's like ridiculously wrong. And that can happen, but it should be rare. Okay? So I think the big part was in my trading was to get trades in New York or London that were worth somewhere between 30 and 50 pips. And what you don't realize is it's not that I'm making 50 pips, it's that I started to trade significantly less. I made less trades. And again, it wasn't because it was becoming more conservative. It was because what I was doing was getting rid of mediocrity. So then I could take this trade here, then I'd flip onto another trade, onto another chart, and if I didn't see an obvious 50 pip, especially a correlated 50 pip move, then I would skip it and go to the next one, and then go to the next one. And my secondary goal was to get mediocre out of my trades. You don't want to trade less. You want to have less mediocre trades. And I'm talking about a stage in your career where you don't make dumb trades anymore. In the beginning, as an amateur trader, almost all your trades suck. They're just bad trades, wrong time, wrong place, wrong everything, right? I'm not talking about that. I'm talking about when you've learned some basic fundamentals and technicals, and now you're entering good trades. You're buying in uptrends, you're selling in downtrends, that sort of thing. And now you're putting yourself into better situations. Not that they pay better, but they're less likely to be small losers, right? You don't want to put yourself in situations like, I think a lot of people get stuck where 1 out of 4 trades are worth 50 pips and 3 out of 4 trades are worth minus 15. Right? Or 1 out of 3 is 50 and the other are minus 25, minus 25, right? You can get stuck in that spot for a very, very, very long time, right? You could spend 2 years, you could spend 4 years trading like this. And MAP kind of gets you out of that, because after a while what happens is you move from 66% losers in this case to only 50% losers. But what's happened now? What's the difference? Instead of break even, I'm up 25 now. Okay? And then over another year or two, you'll improve further and you'll get to like 50, 50, 25. Okay? Well, after a while, it's not even avoiding bad trades. Okay? So again, I'm trying to get you to that point. You don't make bad trades anymore. So it's not something that you're avoiding. Okay? What you're doing is you're qualifying the trades you're setting up. So you should be shocked you don't make 50 pips. You see what I mean? You're like, when this happens to you, you're like, what the happened there? Oh my gosh. How did that thing collapse on me? Right? You should be a little bit dumbfounded. Like, I didn't make money on that? But I don't think you guys are at that point most of the time where you're like, oh my God, I can't believe it. How can I not make money on that? More of the time you're like, I'll place a trade, click. Right? You're like the poker player, right? You're like, I'm all in. Please. Right? Please. Please go. Right? Oh, I need a jack or a club. Jack or club. Please, a jack or a club, please. I don't care which one. Right. Please go up. So that's not what I'm talking about anymore, right? So you know how to trade, all that kind of stuff. Like, let's say in a normal market, let's say in a normal market you were a bull and you analyze this forever and you just totally saw this as support, and now you got this. So for whatever reason, you bought here. You didn't know there was a Bank of England decision today, and you just totally set this up. I mean, you could talk yourself into this, right? You're like, okay, so we got some something going on here, and we got something going on here, and we got something going on here, and then there's fibs anyways from this to this. So I'm gonna 1 double bottom, 2 higher high, 3 I'm gonna buy in this zone, right? Actually, this whole zone. But then to zoom in even closer, there was a bounce right in here, so you bought it. Okay? And you didn't realize there was a Bank of England interest rate decision. Okay? So that was your trade plan. You have everything, right? Everything except fundamentals. You forgot about fundamentals. But let's say that happened, and then you're wrong. It's better to be really, really wrong than jamming your stop really close and taking lots of little shots and having no control over your behavior, right? I'd rather you be wrong and be in situations where 1 out of 3 or 1 out of 4 times your beautiful setup collapses. But what happens if you have beautiful setups, but 3 out of 4 times the setups fail? What can you learn from that? Yeah, you're doing something horribly wrong. Because if 3 out of 4 times you're doing a technical setup that looks beautiful to you, and it fails, it collapses, and dude, you're missing something, right? Probably a time to back out and reevaluate, right? So really think about that, guys. When you pull the trigger, are you expecting to make money? Like, you know you're going to make money? You're practically out on the street spending your profits. I used to do something back in the day, and it just reminded me of that. It was so funny. Back in the day, I'd quit my job and everything. I'd just become a you know, what do you call it, professional trader? I don't know, an independent trader. I quit my day job and everything and trading. I remember when shopping for stuff, everything came down to pips. I'd look at something, I'm like, that laptop, that's like a 120 pip yen trade. I don't know. You know, it's like, I don't know, not in these market conditions, right? You're like, I don't know, maybe in September I'll think about buying this laptop, but not at the end of July, early August, because it's hard to pick up 120. Them a lot of pips, right? But I calculated everything into pips. Everything I went, every meal, I'm like, dude, that good skill. Uh-oh. There's still signs I'm sick. Stupid pneumonia hasn't gone away yet. Gee whiz. So anyways, look at this collapsing. Woo! Thank you. I need to get back to the brandy and Benedictine. That's all. So anyways, pig is collapsing across the board. We got some weekly support here and here. I'd probably play monthly support on this pig dog. I think one of the things we talked about a week ago, actually probably a week and a half ago, we talked about this going up, and I remember like that no one was talking about it going up. But one of the things we talked about is the potential of setting it up on August pivots. I don't think this had quite, I think this was a little bit lower when we talked about it actually, just because it hadn't retraced back so much. But it's still a thought that I want to share with you. If you are a bear on, on anything, okay. Remember though, your weekly swings, or sorry, in this case, your monthly swings, they don't set up low. You don't swing low, you swing high. Okay? So even if you're a bear here, in particular at the end of the month, you want it to rise. Now, why would it rise at the end of the month? Well, maybe bears took profit. Maybe you took profit on your bearish trades. But the thing is, you need to get ready for your next move. And this is the sell zone that we talked about at the end of July. And that was a guesstimate at the time because it hadn't occurred yet. This hadn't been, right? But that is the sell zone for new bears. Okay. So just kind of put that into mind, put it into place. Remember it for next time and next time and next time and next time and next time. That that's really what you're looking for as a bear. The drop, the retracement, the sell, and then hopefully the continuation. You never know if it's going to continuation, but you do know where you want to sell it. And this whole area here was the sell. Okay. Okay. Look at this one. It's beautiful, actually. All right. Yeah. Boy, I'm ready for a nap already. What year is it? What day is it? What time is it? 8:07. So you know what I was doing yesterday? I read through 5 years of oil industry data. It was part of the monthly EIA report that came out. That's what I was reading yesterday. Yeah, Jeremy says be aware of immediate retracements before further downside. Yeah, that's called dumb money. Oh, cool. You got that move, huh? Hey, awesome. We need to start my cigar fund up so you guys can send me tips. You're like, good job, bartender. Stuff a fiver in the top pocket. Thanks, shoe shine boy. Keep the change. Okay. So oil, that's kind of neat, huh? How we drew this. Isn't that neat? It's fairly accurate, right? You guys remember that? Up and then down? This is supposed to be the bottom of the week, by the way. Like we planned this whole thing we've planned, and now there's nothing more to do. This was the buy. Actually, this was Friday's buy, right? This is Monday's buy. And then you see I have it going up, oh, I don't know, 25 cents more or something. And then down, and the green zone is this week's target. That's not bad, right? This isn't yen. This doesn't have to do with the Bank of Japan. This doesn't have to do with Carney and the Bank of England. This is just crude oil. Now, I did something very similar as those other things, right? You guys remember? I have to go to a daily chart. You guys remember setting this trade up right from the bottom? You guys remember this? The target was 72. And I'm like, I have no idea what's going to happen after we get to 72, but 72 is my target. We hit 72. I mean, who would have thought we would have been here since April? That we would have been here all April, all May, all June, all July. Now we're starting August. We still haven't gotten past 72. It's crazy, isn't it? It's just, I think it's crazy. It's my analysis, and I think it's crazy. So, what we had talked about back in June was the rally, the collapse, the creation of a head and shoulders off the left side, creating a resistance on the right side, and a drop to the neckline. It's still my plan. We're stuck on the weekly low. So it probably will do something like this next week, and then who knows. But it's actually a horribly ugly chart, right? But for those who've been trading it since April, actually April, I mean, that's when it ended. Trading it all year, I guess it was, right? To have it go up 25 bucks and then stop on your line, right? Like this is 72 right here. It went to 72.45. The mind is powerful. So, anyways, we're still just here, guys. This is just doing what we said it would do. But when we created that plan, it was, well, first of all, we created this plan before I went to Harvard. But it would go up and then come all the way back. It would come up, it would come down, create a right shoulder. So that needs a new up and then a new down. So we did this in the beginning of June. Then I go away for a month. Right? And it's the end of July now, and we're in here. And I say, oh, look where we are. Oh, now it's going to go up, and then it's going to go down. It's still the plan, bro. So we still, in my mind, we still have two, maybe three, probably only 2 weeks of sort of summer trading, guys, where you still have 2 weeks to be thoughtful about about your trading. Again, this must be the 4th time now since I got back that I've asked you, and you should probably spend time thinking about your trading behavior, your trading style, the way you plan, all the off the chart stuff. One big question I would challenge you to ask, and it's big, and it might be too big, so you might not be ready for this, but think about it. Especially after, me being gone for a month, and then I come back and I say, well, this is going to go up or going down, or all those yen pairs where I'm like, yeah, they just fell, but then they're going to go up, and then they're going to crash, and I'm almost telling you like it's going to go up, and if it's up here on Tuesday, then Tuesday or Wednesday it's going to collapse. So I'm showing you price, I'm showing you the time, the day, the reason why. Are you missing these? Right? It's like if you have a crystal ball, Because most people, when they first start trading, they're like, oh, if I only had the crystal ball, right? Everyone wants the crystal ball. If I only had the crystal ball that was going to tell me the future, then I'd be rich. Then I'd be successful. Well, what if you challenged yourself and say, well, for the last week or two, you have had a crystal ball. What if you still were not successful? What is it that's holding you back? That's a very big question. And most of the time, it's because you're not letting go of your old behavior. I think most people in these webinars, they shake their heads or, yes, Wayne is right. That was a powerful lesson. That's really good advice. I really should do things like go on blind retreats. I really should go to the Bank of Japan website, read reports. I really should listen to, and then you don't. It's normal. It's human behavior. So I'm going to challenge you once again. If you're in a situation where you're getting good advice but you're ignoring it, or you have a crystal ball predicting the future and you're ignoring it, what is it that you will do over the next couple of weeks? Because you got to get ready. Prime time trading is right around the corner. It might be in 2 weeks. It might be in 6 weeks. We don't know. But prime time starts in 2 weeks. What are you going to do in the next 2 weeks to change this? If it's not technical analysis, if it's not fundamental analysis, then it might be you. So now you need to figure out what is holding you back. Why will you not make those changes? You say you want to be a successful trader, or you want to be a billionaire, you want the yellow Lamborghini, but you don't want to make any changes. Like, see what I mean? Like, there's an opportunity to really talk with yourself and mentor yourself and sit down and make the giant leap of somehow changing your behavior, because it's a requirement. Okay? It's a requirement to get to the next step. You need to change your behavior. Remember all these things I've taught you over the years about literally changing the way that your brain is wired. Like, your brain physically will change. You could CAT scan it a year ago, right? And then CAT scan it 5 years now. And over those 6 years, your brain should have changed if I've done my job right. It'll actually have a different shape. The synapses have rewired themselves, right? So anyways, I'll throw that at you. If you've had a crystal ball and you have not been successful, even though you've had this crystal ball, then what's holding you back? Okay? And I'll tell you what's holding you back. Make it even easier. If you don't make a change over the next 2 weeks, that is what's holding you back. Your unwillingness to make a change. You're self-sabotaging before you even get successful. Oh, the best change if you're brand new, I suppose, would be along the lines of preparing yourself on a discipline level. Like, take the same message that I'm giving everyone else that's been here a long time. Is that it's not technical analysis that's going to hold you back. It's not fundamental analysis that's going to hold you back. The technicals are actually very easy. Most people overcomplicate their technicals. And the fundamentals don't change that often. So there's a human nature side. So if you can get sort of the right attitude, going in, the rest should be fairly easy. Okay? So like if I tell you you should go to the Bank of Japan search for the English button, and then switch it over to English, and then search for whatever report came out a week or two ago. What did the Bank of Japan say or do that created a bunch of yen weaknesses, right? And then what happened yesterday to suddenly create yen strength? Like, it's that attitude that you're willing to do whatever it takes to figure out how the market moves and why the market moves and why valuations change for currencies. It's that attitude of going after it, or working weekends, setting up some of these trades. Like, I'd venture to say most of these trades are not that complicated that I've set up over the last few days or the last couple of weeks. We're buying at very logical levels, and then under very logical situations, we're expecting counter trend trades, right? Yeah, that would be happen. Yeah, Michael, that'd be right. That's what I wanted for you guys as well. Peter says, Coach, are you going to add this year's swing trading webinars to the course? So so I wasn't sure about how to do that. Like, so here's the thing, because you have to have graduated from the swing trading course to get in the swing trading group. But if I keep adding swing trading group videos to the swing trading course, then all of a sudden you'll have like 900 hours of swing trading videos to watch. So I think what I'll do is I'll leave the videos that I've done for the last swing trading group. I'll leave it in that swing trading group as an archive, so that when you join the next swing trading group, which is probably only 2 or 3 weeks, I was thinking about it. I'm going to have to send out invitations soon. Then when you rejoin the group, they will be in that group. Okay. Yeah. How do you get notified of the group? Well, anyone that has completed the swing trading course will get an email from me saying, "Hey, I'm setting up another group. Would you like to join?" So if you want to join the live trading group, which will start in 2 or 3 weeks, you need to go to FX Bootcamp. You need to sign up for the swing trading course, and then you need, like, I don't know, 15 hours worth of videos you need to watch. So you better giddy up. Oh no, that's day trading. That has nothing to do with swing trading. Yeah. And again, because I have bronchitis and pneumonia, I haven't been able to plan. So I don't think it's going to be next week. No, it won't start next week. Please forgive me. My pneumonia has kept me away from getting that done. Oh, like I can't even get through a webinar here. How am I going to get through a 3-hour webinar tomorrow? I'm exhausted. I don't think I'm going to be able to do it. You need medication. I have dedication. That's all I need. I might not be able to get through 3 hours. Like, I'm exhausted now, and I've only been talking an hour, right? How am I going to do 3 hours? I think I'll drink alcohol. That usually works for me. Yeah, I'll just drink some scotch. Oh, oh, yeah. I think I'm gonna have to go. Look at me, man. Does that look good? I'm exhausted, and the funny thing is, I'm sweating. Why am I sweating? Oh my god. Arr. So, anyways, Peace on earth. May the pips be with you. May your profits be above average. Again, I am sorry for being sick for 2 weeks. It sucks. I never get sick. But the thing is, I guess I get sick, but I never take time off. So, once again, I hope you see that as a sign of my dedication to working with you every day. You're that important to me. So, those non-farm payrolls, we will get through that together. So it won't be, you'll have to sign up at FX Street for that. And yeah, time to go to bed. Tired. So anyways, peace on earth. May the pips be with you. May our profits be above average. Thank you.